Morning traders, it's Tuesday the 13th of August and let's jump into the Dax Technical Analysis. It's been a little while since I've done a video, but thank you for your feedback. Glad that you want to see more of it. So let's jump in. Well, on the Dax, you can quite clearly see the series of lower lows, lower highs, and we have recently put in a peak around about here at 11,851. And what we now need to see is whether or not this 11,442 level will hold, or whether this current intermediate downtrend here from this high will continue and eventually break the 442 level. If it does, it confirms that that is a new lower high and the trend is still in play. Nice and simple. If we move that forward, you can pretty much see how things are looking at the moment. Since we saw this spike up here, which is a potential rejection zone that might be worth watching for future visits. It's already had one visit here, and you can just mark out, similar to as you would normally do, how price action has worked here. You'll notice that this high failed to break that previous high despite breaking or piercing into this zone that we've marked out here, but the rejection was significant and price action broke below this low, which continued the trend. And then you found new low here, lower high there, another low here, and it just continues. So this low here should be looking to break below this in order to continue the price action. It looks like it may well have pierced it, but you probably want to see it break a little lower into that. Potential retracement zones we can take a look at in a moment. If we just sort of have a check onto the price action from, well, let's just take a look at yesterday here. This is the current market profile for today as it's developing right now. Market profile is essentially just looking at supply and demand. It's kind of whether or not sellers can agree with buyers, and it's just a useful way of viewing price action as to whether or not the prices are fair or not. Okay, so this is the profile, the TPO, time price opportunity profile from yesterday. Let's just see whether or not we can split that up. Here we go, into its actual relative columns. Each one of these columns is price action over a 30-minute frame, so it's almost like a 30-minute candle. And you'll notice we've got a single print of C's up here. Okay, so that was an unfair high. Price was rejected pretty quickly here. And you'll notice that we spent the majority of the first part of the session all the way up to the E print above what was the value area for the day. The value area is the darker area here. And it looks like this kind of JKLM print down here. It started to test outside of the value area, and initially was found to be an unfair low. So the day's perception was that, you know, the fair value was going to be in this area here. This line here was the point of control for yesterday. So it's likely to be revisited the next day. As you can see, it was here today. And we've kind of built the majority of the profile today in that zone. So the first part of the overnight session was actually in the value area from yesterday. And we started to produce a developing point of control underneath yesterday's, and it's just a continued trend, the downside really. Another single print up here, but probably not going to pay much attention to the numbers, the numerical prints, just because it's so early in the session. All right, so yesterday the profile was skewed, if you like, to the downside. What I mean by that is that the value area was at the bottom of the profile, and it was actually below the value area of the previous day. And I think what we can do then is just go and take a look at the actual volume profile, which is similar, but has some fundamental differences. And you can see that we're working with these areas from yesterday. So the point of control on the volume profile is 11,669. We are below the value area low, and just notice here how we have failed to capture back inside that zone. There's a rejection here. So really for me, I'll be watching to see whether we continue to break below this 600 level, and if we do, then it's potentially going to be another down day. And but if we manage to hold that level, then yeah, it could be we could be finding some balance in this zone. The only other thing to note is that the gap has already closed from yesterday, or from this morning's session, should I say. Gap has already closed. There's not a lot of interest to find to the downside. Exposed points of control would be something to maybe look out for. I don't have enough data on this chart to be able to show you a bit more. Let me just see if I can load up maybe a few more days. And I think we can see that this was an exposed point of control back here, which has already been taken out, it would seem. Excuse me, already been taken out, it would seem, over here. So not a lot really to watch out for, apart from the fact that some of these lows would likely be revisited down here. Keep an eye out for those. Okay, let's go and take a look at the strategy real quick before we get into trading on the day. Yesterday, just using the DTI strategy, you'll see here that we've got the red section suggesting that we're still in a bearish frame. And it actually in the second half of the session did turn bullish, and there were a couple of buy signals here. But just to run you through a couple of these examples. Again, you should be using this already if you remember. And if you're not using this, then get yourself a Sierra Charts package and get using it. So in a bearish market, when we've got the red overlay, I'm looking for sell signals, and this is an example of one. Price action turns to the dark blue candle, which is a sell signal, and you're looking at getting short, putting a stop loss above the most recent dot. As soon as the candle turns color, you get in on the open of this candle where the signal is, and you look for 4 to 1. Sometimes you get it, sometimes you don't. You might get out early, you might move your stop loss or trail it and get stopped out, whatever it might happen. There's a number of ways you can handle this. But in this example, that's where your stop loss or your take profit target would have been, and you'd have hit your target. Happy days. You risk 1% on the trade, so that would be 22 points. You risk 1% of the account on that, and you're looking for 4 to 1, which means that when it does hit, you get 4% added to your account. Okay, so you only need to hit one target out of every 5 trades in order to technically break even, ignoring any spreads and commissions. So you only need a 20% win rate on this. So, this is a good way of managing your bankroll. If you hadn't got into the first trade, you could have got into the second one, and same situation. Price action was neutral here. It turned to bearish again, so you would put a stop loss there. You would enter in the start of the next candle, which looks like it would have been down there, and you'd aim for 4 to 1. There's a 30-point stop loss on that one, and so you'd be looking for 120 for 4 to 1. And I don't think that would have got there yesterday. And in actual fact, what did happen is price action stayed inside the deviation low, which is this lower band here, and price turns into a bullish bias. Let's just go with bias for now. So there's a few things you would have probably done. Once you'd have got yourself into some profit down here, you'd have moved your stop loss to break even, and that would have led to you getting stopped out there at break even, probably. Or perhaps you would have changed as soon as you would have closed above these dots here, or if the bias changed from red to green, like you can see here. A couple of ways you could have managed that trade. Suffice as to say that it didn't hit a full stop loss, but it didn't also get down to a target, so you'd have had to have managed that one your own way. And then once it changed, same situation, you're looking for buying signals, which is where price action turns green inside this green overlay, and you look to put your stop loss by the dot where the candle changes, open at the start of that next candle where the arrow is, and then look for 4 to 1. You'd be risking only 11 points on that one. You'd be risking 1% of the account. You're looking for 44 points profit. And in this particular case, it looks like you would have hit your stop loss. So you would have asked yourself whether or not you wanted to have another go. This would have been the one here. That also looks like maybe you'd have been okay with that one. But I don't think it would have hit the target. You'd have put your stop loss underneath that dot or by that dot. Start of the next candle, which looks like it would have been up here. And then you look for 4 to 1, which would be way up there. 29-point stop loss. and after the races, and it looks like that one would have also been stopped out in the evening. But in reality, depending on how you like to trade, you may well have actually just found your target in the morning session and then you're done. You know, you don't need to sit at your computer looking for opportunities to trade all day if you've already hit your target first thing in the morning. Just walk away, take your money, get out of there. The longer you stay in the market, the more opportunity you're giving the market to take your money back. So if you get your money early, get out of there. Right, guys, that is pretty much it. The only other thing I guess I'll show you is the 3 indicators, which will be available for members on MetaTrader. And you've got the range trader, the dip buyer, and the rally fader. Useful indicators depending on whichever bias you believe the market to be in. Whether you think it's a ranging market, whether you think it's a bullish market, whether you think it's a bearish market. You set yourself up for the bias that you believe for that day, and then you can set whatever indicator of these 3 up to provide you the signals that you want to trade for that day. So if you think it's a neutral market, you'll be using the range trader, and then you just put the range trader on. You look for opportunities to both buy and sell, and you can just simply trade those as and when you want to. If you believe that it's a bullish market, then you're looking to buy the dips. So you put the dip buyer on there and you're looking for opportunities to take the longs. Now in this current DAX market, it's not bullish, so you wouldn't be using the dip buyer, you'd be using the rally fader. So you're looking to basically fade the rallies, and so you're looking for it to shoot into a rally and then you can short them. And so these are a number of different indicators you can use. Now what I am going to start doing is producing a series of tutorials. It's mainly aimed at my members, but some of you guys will be able to gain some insight from it as well, about how you can use expert advisors to plug into these indicators, or actually any indicator that you want. So you can turn them into automated trading systems. So in the morning, what you'd do is you'd choose your bias for that expert advisor. Let's say it's bullish. It would then decide, okay, if it's bullish, in that case, I'm going to use the dip buyer, and then it will go off and trade based on whatever parameters you give it. You know, let's say you want it to trade maximum 3 losses in a day, and then off it goes. It does whatever it needs to do. You choose what reward you want for a trade, or how many points you want to risk, or whatever, and it will go off and do it. And then maybe the next day you decide that you want to use the range trader, and then off it does that. And I'm going to show you how to put them all into the expert advisors. Anyway, guys, that is a good introduction back into doing some of these videos. Your feedback is always key. I'm going to need you to let me know the kinds of content that you want me to include in these videos. So send me a message on Telegram. Make sure you subscribe to this channel. Make sure you hit the bell so you get updated with any more content that comes out. Get yourself on the website. There's loads of content on there. It's all free, well, the majority of it. And yeah, look forward to seeing you on the other side, guys. Hope you have a good trading day, and I'll look to come back with another video very soon. Take care.